Welcome to Season 10 of Talking with Traders as we begin 2025. We're into the fifth year of this podcast that began in 2020, and we've just surpassed 200,000 downloads of Talking with Traders. Once again, IG have come on board as the sponsor of this podcast. We're truly grateful to have such a global leader in online trading as our sponsors. In the coming weeks, I'll be interviewing various guests from around the globe on the topic of trading. Some of these will be past guests that we welcome back to the show, and some will be new guests. The idea is to attract a broad spectrum of different perspectives from players in various areas of the markets. None of what you hear here is financial advice, but it is intended to get you thinking about how you might be able to apply what you hear here to your own trading and investing. Remember to subscribe to this podcast on your favorite podcast app. That way, you'll be notified when new episodes are released. Or if you watch these interviews on YouTube, please subscribe to our YouTube channel and give us a thumbs up and leave a comment if you wish. We welcome the engagement. Once again, thank you to IG for sponsoring this podcast into its fifth year, and thank you, listeners, for your continued support. Now, let's get into this week's interview. Evan Medeiros is my guest on this week's Talking with Traders podcast. He is in New Hampshire on the east coast of the US. Evan, welcome to Talking with Traders. It's great to have you here.
Thank you so much, Garth. I appreciate the invite. And I'm going to commend you first that season 10 and cranking on. That is very impressive. So congrats to you for the success on the podcast and the longevity, because it is hard.
Yeah, it is indeed. Well, thank you very much. Yeah, we've been going at it for 5 years. We've got over, I think we've got like 115 interviews in now, over 200,000 downloads. So it's been good. It keeps growing. But it's also thanks to guys like you that are willing to come on and talk to me. And it's always fun for me to reach out and meet new people. And I've been looking forward to chatting to you about the way you trade and your style, because I watch a lot of the videos that you post each week on YouTube, and they're very good. So commend it to you as well. And I think, just interested to hear about your story, how you trade. To start, just tell us a bit about your background, really, and how you got to this point where you are now as a full-fledged systems trader.
I'd love to. So I've been trading now for about 15 years, a little over 15 years at this point. 2009 is really where I sort of entered and started to cut my teeth on trading stocks. And my formal background is computer science, and I was sort of pursuing a computer science degree, or I guess I was just graduating at the time. But really what got me interested in the stock market was through online poker, actually.
Oh, wow.
I used to be a very avid online poker player, and in high school enjoyed the game of poker, just very recreational and having fun with friends. But then as I got into college and I started to play more and take the game serious, it became this recreational activity to oh no, there's an actual business here, right? Like you can actually use odds, use statistics, and generate at least a side income. And that's what I did. It was my job through college, playing online poker. I used to play 10 plus tables at a time.
Wow.
And just you're playing odds, you're playing hands, you're playing positions. Sometimes you know the players. There were poker HUDs back in the day. I'm sure there still are, that showed stats on people you played with. And it was all probability driven, all bankroll management. And I was absolutely loving it. I was doing pretty well. I mean, I was a broke kid at the time, didn't have much money, but back in 2008-9 is when in the United States, the legal hammer started to come down on the industry and making poker essentially illegal to play for a US citizen. And at the time, I had accumulated so much knowledge and interest and passion into this thing. And I remember on the old 2+2 forums, for any folks that they're probably still around, some of some of the poker players that I used to talk with basically said, well, it looks like it's the stock market for me now, like the stock market full time for me. We can't play poker. And
Yeah.
at that time, I said, stock market, heard of it, don't know anything about it.
Right.
But it was that it was that kind of boot out of the online poker to then say, what is this trading thing? And sort of off I went into the deep end of opening a brokerage account and then applying the skills of poker to this thing called trading. And
Yeah.
that's sort of the gateway into it back in 2009.
Yeah, fascinating. It's amazing the parallels between poker and trading. Yeah, exactly the risk management. It's also the whole concept of you know see each bet as it's independent of every other bet, and play with high probability odds over the long term, and you'll make money. But accept that you're going to be folding a lot of hands while you find the winner, right? Find the pair of aces.
Absolutely. Yeah, it totally. The biggest distinction, though, I will say, and I always kind of think back to this, is in poker, there's a thing called table selection, right?
Yeah.
Like you can kind of move around and find the fish, right? The,
Mm.
the 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 easy money. Like that's who you're trying to play against. You're trying to play against the person that's having a few too many drinks and don't know the odds, and you're
Yeah.
trying to, it's a little ruthless, I know, but I mean, that is unfortunately the business of it.
Mm.
In the stock market, you're at the top A leagues right away, right? And that's a hard transition. That was something that was like, whoa, you're just playing with the best right
Yeah.
off the bat. There's no
Yeah.
table selection here.
Yeah.
So,
Yeah. Yeah.
but yes, everything else, bankroll management, position sizing, all that stuff, it translates for sure.
Yeah. 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 And I mean, in terms of what you do now, I know you've got three trading systems that you run, and we're going to talk about those. Uh, but presumably, your computer science background, along with this interest in poker and that transitioned into trading, must have gone very nicely hand in hand to get you to where you are.
Yeah, it did. Now it didn't save me from blowing up two trading accounts, in the early days. So as much, technical training as I had, I still brought two trading accounts to zero in my first, 2 years trading. So there, it was still a bumpy and windy road. But perhaps I could, maybe adapt a little quicker and survive through the learning curve to eventually get to where I am today. But the really, quick from 2009 to where I am today, I like to say that, pretty much every year that has gone by in trading, I have extended my time frame to a longer holding period, just generally speaking.
Right.
And I've become more rules based in my approach. And so the trading systems that you refer to that I run now, they are 100% rules based. They do not need Evan to run. They are running right now and they are making decisions. Back when I started, that wasn't the case. It was me figuring out how to trade, how does a market work, trying breakouts, trying momentum, trying options, all this
Yeah.
stuff. And
Yeah.
basically zigging and zagging, and each year sort of taking myself, removing Evan from the trading
Right.
and creating more rules based to eventually kind of make myself obsolete. And so that was the winding path to kind of get to where the several trading systems I'm running today.
Yeah. Okay. Super. Well, let's talk about them. They've got interesting names. You've got Merlin, Lamorak, and Galahad. And anybody who knows Knights of the Round Table will recognize
Yeah.
those. So before we get into what the mechanics of each of these systems are and how they work, I mean, I'm very curious about the names and how you came up with those. Any particular reason?
That's it. You nailed it, right? So it is always fun to, most people I feel like the names kind of go over the head. Usually Merlin is fairly recognizable. The other two kind of get a little bit lost in the weeds. But
Yeah.
yeah, I was a computer science nerd. I was a gamer back in the day, and I used to just love medieval knights, castles. Like I loved it growing up as a kid, and I used to play a game called Dark Ages of Camelot. It was this immersive experience with
Yeah.
all the legends of King Arthur. And I just loved it. So when I started to think about these trading systems and kind of how I was going to bring them all together, I thought using that would just be kind of a clever nod to just a fun little hobby side interest of mine.
Yeah.
And yeah, we've got three trading systems and
Oh,
two Knights of the Round Table, and we got Merlin in there as
yeah.
well.
Yeah. Okay, cool. Well, it's interesting names and a unique
Yeah.
story. So let's get into each of them. Let's start with Merlin.
Yes.
I mean, I've had a look on your website, and for listeners to the podcast that want to check it out, go to thetraderisk.com and you can find out, all about these trading systems and how they all work. And you can subscribe to get the signals, right? We're going to talk about that at the end of the podcast as well in terms of the services you offer. But let's talk about Merlin. I mean, this one looks like it's a swing trading strategy, relatively long hold times, but pretty good success rate from what I can see. And the back tested results show superb performance and superb outperformance over the indices as well.
Yeah, so Merlin is sort of my first love. It was the first trading system that really came to be, and you know, I've explored and tried lots of different trading strategies and styles throughout the years. I tend to find myself gravitating more to the buy the dip or the mean reversion, or I kind of like to buy things that most people don't like to buy. I mean, is really, if I had to kind of sum it up, that's just my personality. Now, these trading systems take on different flavors of that, but Merlin is, in some sense, that taking on that ethos as well. So Merlin is an end of day swing trading system, and it is essentially trying to buy strong stocks or leadership type stocks um, after they have retraced in price, after they have pulled back, after they have gotten beaten up for some days, weeks, maybe even a couple of months worth of time. Now, ideally, the long-term trend is still at our back and we still are in, an overall uptrend. We don't want to buy disasters and things that are going to zero.
Yeah.
But if it's still maintaining a lot of its kind of longer term trend characteristics, we're waiting for attractive opportunities to try and get involved in these types of stocks. And
Okay.
the holding period tends to be a couple of months, usually,
Yeah.
several weeks to 2, 3, 4 months. In
Yeah.
fact, you could actually get some stocks. I always kind of celebrate. I need a little bell behind my desk because I just saw Interactive Brokers will usually give you a little update notification that says one of your stocks is transitioning to long-term holdings and it's long-term capital gains. And I'm like,
Mm.
wow, we've held that stock for 12 months. So
Yeah.
that can happen too. It's more rare, but it's a buy the dip and ride out a little bit of that prevailing trend type of swing trading strategy.
Okay. So in terms of
Yeah.
stats, I mean, on the website, it said you've back tested this to 2006.
Yeah.
So I presume some of the numbers are not real. They're back tested results, right? But it says an average of 117 trades per year, 64% win rate, which is very high, and an average return on each winner of 10%. And I presume that's on the underlying, that's not on a risk adjusted basis.
That's correct.
And an average holding time of 37 days. So, I mean, those are great numbers. Are you, because this is back tested, are you managing to achieve these sort of results now with live actual trades?
Yeah, it's a great question. So the back test for those stats go back to 2006, and the strategy officially started trading live in my account in 2019. So those stats are, I guess, 60% back test or 70% back tested, 30% now just ongoing real returns.
Right.
The real so all the stats, yep, that those should all be the latest stats. Real trading since it started in 2019 has underperformed, I would say, those long-term statistics. And there's it's a duality of a response. It's kind of a complex kind of way to think about it. But when we think about the types. So when I start to do analysis on like how performance has been on a trading system, I'm thinking about what environment should it be doing well in? What is my expectation given the environment, given the circumstances that we've had dealt to it? So when I look at Merlin, Merlin tends to be correlated to the Russell 2000. It's
Okay.
trading a lot more kind of broad based. It's looking at more small and mid cap companies.
Okay.
So it's going to be more tethered to that. And so when you have the romping and stomping of these market cap weighted indices that continue to ratchet higher, it's not necessarily or it's harder. I mean, it just depends on the breadth environment on whether or not you're going to outperform or underperform during that time. So I think when I looked at it last, I think the CAGR since the compound annual growth rate since we started live is around 8 or 9%.
Okay.
So it's definitely under the long-term average of 16 and change or whatever it is.
Yeah.
Um, but we also know that, or I've seen historically, Merlin can have a 45% year. It
Yeah.
could have, and it's had a couple of those. And so, the question is when you're a systems trader, when you're any type of trader, you have that self-doubt of like, oh boy, is it not doing what I should do? Is it not doing strong enough? Should I end it? Should I change it? And I think, at least from my experience, you got to give these things time, right?
Yeah.
So when I look back at the performance and I say, I've traded it for 5 years, 8% compound annual growth rate. It's kind of lousy, but when I look at what the Russell 2000 has done in the average stock, it has
Yeah.
very much been a market cap
Yeah.
weight driven, bull market.
Yeah.
And so it's kind of doing what it's supposed to do. You know what I mean? I
Yeah.
don't really have too much else, to really knock it, or I don't have a reason to, I'll always try and maybe look at things around the edges if it needs
Mm.
to be tweaked, but I definitely
Yeah.
am not someone that is out there, changing the system, every month. That's
Sure. Yeah.
recipe for disaster. So,
Yeah.
so yeah, I think it's, a little bit under expectations of what I would love to see, but they're not so bad or they're not deviating to say that something's
Yeah.
broken, at least
Sure.
not in my mind. Yeah.
Yeah, yeah, yeah. And I
Yeah.
mean, I guess it also had to, if you started the live trading in 2019, it had to go through COVID as well, which was quite a scary time. And I'm sure that, yeah, that's a bit of an outlier in terms of like 17 years uh, of back testing.
You're 100% right. I remember writing that note to some of the subscribers of the trading system. I mean, COVID period was the fastest. I forgot the stat. It was like the fastest 20% correction
Yeah,
in history, or
yeah, yeah,
just
yeah.
in
It
the
was
number of days.
it was insane. Yeah,
It broke a lot of records. And then I remember opening, I was actually speaking at a conference in New York, a money show conference, during the height of COVID, February, before everything went into lockdown, or maybe it was the end of January. And I remember in the hotel room watching Merlin try to get out of, taking stop losses basically. And they were staggering the open. Some of the stocks couldn't even open yet. It was like a
mm,
manual, pit
yeah,
open on some of these things. And
mm,
from a quant, like you can't, how do you prepare for something
mm,
like that? You know what I mean? This is where you almost need that real life experience to
yeah,
understand, like, oh, things break.
yeah,
You can't tighten your models too much,
yeah,
and you need to be able to tolerate these types of
yeah,
events that you are not going to have had happen in the past.
yeah,
And so, yeah, so yeah, exactly right. And yeah, it was still a painful year or month, but
yeah,
I was happy that the trading system, without any intervention from me,
yeah,
was able to, kind of continue operating type of
yeah,
thing.
yeah. And this particular strategy, is it long only? Does it not take short trades?
That's right. Yeah, it is long only. It does have a kind of high level market regime filter that it is looking at.
Okay.
Because it is a buy the dip strategy, you kind of need to taper off your eagerness to buy dips if
Mm,
you're in a very unfavorable market environment.
yeah.
I'm kind of mixed and torn. I know market filters are very popular, that traders like to use them. And when I say market filters, like a S&P or a
Mm,
broad index filter.
mm,
Um, we use like market breadth and we kind of try and be a little smarter about it, but it has a regime to kind of go into more of a defense mode. So it won't short, but in those downward kind of spirals, call it a bear market, it would then look to maybe seek fixed income opportunities or even
Okay.
gold or just dollar index type of stuff as kind of it's
Okay.
a safety instrument, but it would be
Okay.
long only.
Right. Okay. Okay. Super. And in terms of risk management, I mean, what I don't know how much you can talk about the system and the actual mechanics of, what triggers a trade, or if that is proprietary and you don't want to talk about it. But, like, give us an idea of what needs to happen to trigger a trade, and then how's the risk managed on it? What would get you out of that trade
Yep.
if it wasn't working, and how do you limit the losses?
So Merlin is probably the most traditional trading system. So basically, the way a trade is structured is once an entry has been filled, it has an initial stop loss, and
Mm,
that position size is volatility adjusted.
okay.
So we're essentially going out kind of like a lot of trend followers would do, or I mean, a lot of traders would do too, swing traders, but they would vol adjust their position size. They'd understand where their stop loss needs to be.
Yeah.
They'd look at the volatility of the stock, position size accordingly. And then the way Merlin operates is it puts one target as a partial target at basically a 1R
Okay.
multiple.
Yeah.
So if it's risking $10, it's going to go and try and take 30%, 35% of the trade off at a 1R. And then
Okay.
it's effectively going to kind of start to trail a stop like a trend follower would,
Yeah.
would. And then it would look to kind of really participate in trend continuation.
Okay.
So that's kind of the mechanics on the position sizing. Position sizing with Merlin, so it trades U.S. equities. It can trade some very small stuff. It can trade things down around, as low as 200 mil market cap,
Okay.
and they can be more volatile. But it is, and it does hold through earnings. It holds through
Wow.
all company earnings. Yep. So it is kind of by default, it is our most, it's kind of our most explosive system in terms
Mm.
of just, it's got volatility baked
Yeah.
into it for
Yeah.
sure.
Yeah.
And especially those earnings events, they can, make you very
Uh,
happy. They can make
Listen,
you very sad.
oh, tell me about it, right? So, I mean, we're sitting here today. I'm long of Trade Desk. It's the 13th of February for anybody listening to this, wondering when we're recording it. And it's a stock that I've run the trend on it. It's a position in a portfolio. It's not a big position, but since May last year, that thing's been trending up beautifully. Today on earnings, it's down 33%. Every bit of profit I've made has vanished overnight. It's like, wow, it's like walking through a field of landmines in the earnings world, right? and,
Merlin had
and
that as well.
did
So
it? Okay.
Merlin got
Oh,
stopped out of the trade dress today too.
okay.
Huge outsized loss for
Yeah.
that type of, but it's tough. But that was a stock. So the trade desk for anyone that is now looking that chart up in real time, I'd have to look at when our fill was, but it was, I mean, it was probably in early January, I think is when we got involved in it.
Mm.
So not too long ago,
Yeah.
sadly.
Yeah.
You were much more astute and, and hanging out in it much earlier.
Yeah.
But if reference that chart and you look at like that January pullback, that was a mild pullback, but I think that's when it sort of established. And
Mm.
then, of course, earnings now just tanked it, and
Yeah.
we sold at the open this morning for
Yeah.
a painful loss.
A
And
painful loss, yeah, and it
there it
happens.
is. It
But
happens.
then, yeah, what sort of how many positions do you have on at a given time then in the system?
Yeah, it can have a lot. So it can have up to 20
Okay,
would be the max.
right.
But it is vol adjusted position sizing. So, it could be a concentrated 12.
Mm,
But
okay,
we usually have enforce like I think 12.5% is the most we would put into any individual stock
yeah,
from a NAV perspective, just
right.
because it holds through earnings, because it's
Mm,
doing these things, you got to kind of, control at the position size level
yeah,
because just like the trade desk, like you mentioned, right? We had all the intention to get out if it crossed below, I'm making it up, but if it crossed below $110, we were going to
yeah,
be out of that stock. But guess what? It gaps down to 80 and
yeah,
change,
yeah,
and that's the price you're getting,
yeah,
right?
yeah,
So,
yeah,
yeah,
yeah.
yeah.
Okay, and that's it, right? That's where you've got to have your position sizes correct. I mean, as you say, if you're in let's say your max position size, as you said, is 12% of the portfolio. and you're in a stock like this that gaps down 30%, well, okay, that means it's basically 4% of your total portfolio that you're going to give up as a worst case scenario there, which is still not fun, but it's by no means catastrophic.
Exactly right. Yeah. And yeah, that is it. You're probably going to see one or two of those a year, right?
Yeah,
And
yeah,
it's a huge loss. You know,
yeah,
4% on one individual is is what I would consider a huge loss,
yeah.
but it is unfortunately it's part of this trading system. It's
It,
part of trading. Yep.
It is. And then I guess at the same time, you also get the ones that explode on the upside. I mean, we had, Palantir the other day gapped up 25% on the open. Beautiful trend. So I suppose, it's swings and roundabouts. Yeah.
That's exactly right. Yep. Yep. Yeah.
Yeah.
Merlin in 24 had plenty. I think it had 200% plus winners in just multi-month periods. So,
Yeah.
yeah, you're gonna get that variety both ways, and hopefully, again, you're winning a little bit more when you're losing. And if your strike rate, the win rate does, is pretty high on Merlin because the way it structures of the buy the
Yeah.
dip and
Yeah.
all that stuff.
Yeah.
So, yeah,
Yeah. Cool. All right.
yep,
Let's chat about the next one. That's Lamorak. So this I see as a long short strategy. It looks like it's far more active than the Merlin strategy. 327 trades per year on average. Also a 64% win rate, which is excellent. But your average gain on this one's much smaller, 2.27% per trade, and an average holding time of 4 days. So talk to me about this one. It seems like it's, way more active, way shorter term.
yeah, exactly right. So it is still, one of the properties that I still enforce in all of my trading systems are an end of day property. So, especially as a retail trader, I really don't want to have to worry about the infrastructure of real-time data, real-time decision making of just order placement and data feeds and backup power and backup internet and all that stuff. That there's just a whole step up function there. So I'll always enforce that basically it's an end of day system, which means once the trading closes for the day, my systems will go through and look at all the trading activity that occurred, and then it'll place orders to submit for the next market open. So that's how Merlin works, Lamorak works, and Galahad works.
Right.
So for Lamorak, though, it is what I would consider one of the fastest trading systems for that type of design choice. So it is holding things for just a few days' time. It is classic mean reversion, and it is classic sort of mean reversion in the short term, in the several days to I guess you could look at hourly intraday charts, but I always still look on a daily chart.
Yeah.
But it's essentially looking to buy things that are out of favor. It's looking to short things that have gotten a little too excited on the upside.
Okay.
It trades a lot, so it trades, basically a couple, one or two trades a day, 300 plus trades a year. Um, Good batting average, win loss ratio slightly below one.
Yeah.
That's very counterintuitive for lots of traders. That's
Yeah.
not something that feels perhaps comfortable because it is winning a lot and it's trading a lot too, right?
Mm.
So when you look back at Merlin, Merlin has a similar win rate,
Mm.
but it only trades 100 times a year.
Mm.
This is trades 300 times a year, same win rate, but the profit margin on each trade. So it's working a little bit harder.
Yeah.
And it also works in different market environments, which is nice. It's a little more agnostic as to whether things are trending up or trending lower. In fact, it likes volatility and it likes chop. And that is a unique property of it.
Yeah.
So a lot of traders are kind of gravitate towards Lamorak because it is so active.
Mm.
It is a very hard trading system to follow, I would say,
Mm.
because, and this is going to sound blasphemous, there is no traditional stop loss in this trading system for
Okay.
positions. So when we buy a stock, there is no, we're setting a stop loss at
Okay.
said level below the market price.
Okay.
Um, it is based on real time. I mean, well, real time, but it's based on the daily data. So
Mm.
essentially, if it's getting in because it considers something oversold or has the ability to, kind of revert, there's some value that's trying to extract back to the upside, it's not going to let go of that trade until it thinks that value has been kind of secured, or it is, there's no longer an edge there to hold that trade.
Okay.
Um, and that is kind of a scary thing for a lot of traders.
Okay, yeah, I can imagine. And in terms of the way you execute, I mean, if I'm hearing you right, does your system input the orders as well? So it gives the signal,
So
but also inputs the orders, or do you have to
yeah,
input the orders?
so I do, that's where I do come in, and I just kind of give my stamp of approval and then hit the submit button. But
Okay,
what it tends to do is it spits out at the end of the day, it'll spit out a CSV of all my orders.
right.
And then I submit I just submit the Excel sheet or the CSV sheet to I use Interact for IBKR, and off I go. I'm good for the next morning. But
Right.
I'll still always, I come in, I just want to see, okay, the system just downloaded all the data. Here's, okay, it's buying this tomorrow, buying this tomorrow. Cool. Look at the Excel sheet. Okay, good. Looks good. And, so
Okay.
I'll do a glance over, but,
Okay.
yeah, in theory it could be automated, but I still
Yeah.
like to just make sure, it's doing
Yeah.
everything as it
The,
should.
the, the reason I ask that, and I'm curious, is because emotions can sometimes get in our way. And do you override the system sometimes because of emotional reasons?
So I've run the systems since 2019. I have intervened once, and it was with Merlin on, I, it might have been COVID. There was one fixed income safety position that, I intervened with once. I sort of honestly even forget the true reason. I think it was some safety fixed income position that almost like feels like I had lost the peg to what the heck was going on. It might have been COVID time. That's the only time I've never intervened anytime
Okay.
else. I try the real work on all of this is the system design. It's all the
Mm,
work you put in ahead of time. And I really do want like loosely fit trading systems that are
yeah.
not, I mean, it's easy to say, but they're not data mined. They're not strung too tight. They're not looking at a million parameters. We want
Yeah.
very loose fit, kind of like
Yeah.
that just can take all of these things like a COVID, like oil going to -0, below
Yeah.
zero.
Yeah.
So you're trying to construct things like that. So thankfully, knock on wood, I've only had to intervene once.
Okay. Okay. All right. Super. And in terms of the software that you use, you've developed these yourself, right? Um,
Yeah.
what
Yeah.
software do you use to develop the trading systems?
Everything's custom for the most part. So I do, believe it or not, I do a lot in Microsoft Excel. It is
Okay.
very old school.
Yeah.
Microsoft Excel, and then just a ton of back end like VB code, and then some
Right.
database code that is
Okay.
um, working with the database of all the stock data I
Okay.
have.
Okay.
Um, but the interface and like the way I interface with a lot of these trading systems is basically through Microsoft Excel, and then just a lot of back end code.
Right.
Now with the whole advancement of AI, I might look at like, revamping that into more of a Python type of thing,
Yeah.
and a little more glitz and glamour. But
Yeah.
for now, it's working. It's been working, so that's what I'm doing.
Magic. Okay, excellent. All right, then the last system is Galahad. And this one looks like it focuses on ETFs, trend trading in ETFs on things like the S&P 500, treasuries, gold, Bitcoin. Um, and this one's got on the website, very good compounding growth rate at 23% per annum. Let's talk about this one.
Yep. So this is the newest trading system that entered the lineup. Largely you could say this is kind of the most vanilla trading system I have. It's very intuitive. It's probably like a good beginner trading system. It's just intuitive. So basically, it's a single trading strategy, but it almost has like two different components to it. So there's like a fixed core position of ETFs that Galahad holds on to.
Right.
And this is designed to be like an all-weather basic portfolio that you're
Yeah.
pretty much always holding at all times.
Right.
But there is some rebalance rules. You are adjusting on the margin. Sometimes you're taking some profits, or you're rebalancing out of some things. So it's not just total static and hold, but it's pretty much there. And then there's a satellite portfolio that is basically a trend following portfolio. And that is where it is, really engaging when the environment is strong and it is trading NASDAQ. More specifically, it's trading the 3x levered NASDAQ TQQ.
Oh, wow.
Yeah, so that's how it's getting its real sizzle, and the
Yeah.
way it can compound is when it's got the alignment there on a favorable market environment and it's got exposure to TQQ. It's also trading TMF, which is the 3x levered long bond treasury bond, so the
Okay.
TLT three times.
Right.
Um, and then it's adding on some Bitcoin exposure when those trends are supportive. So it's ETFs only. It's trend following, and then it's kind of like that fixed core portfolio, and it's market cap weight, it's market cap heavy, it's ETF weighted.
Yeah.
And so when
Yeah.
you think about this third trading system and you think about the two we just talked about, you have Merlin, which is trading a lot of individual smaller stocks. You've got Galahad now, which is making sure it's on kind of that market cap weighted, bigger and
Yeah.
longer time horizon.
Yeah.
And then you have Lamorak in the middle, kind of just long, short, very kind of diversified and doing its different things. So to me, the magic sauce is all three of them. Not that I would expect anyone else. It would require a lot of. I mean, it's probably still 10 minutes a day. They're end of day systems, but there's a
Yeah.
lot going on there.
Yeah.
Um, but that magic is the three of them kind of working in harmony,
Yeah.
trading different things, trading on different time horizons, and operating with different rules.
Yeah. Okay. Super. And just quickly on Galahad, I'm interested that you said you use those leveraged ETFs. If you're using those, do you sometimes look at the inverse ETFs as well? Then, in other words, what I'm trying to get at is, and I don't think the system goes short from what I could read on the website, but if your system allows you to use the inverse ETFs, kind of gives you an opportunity to take advantage of a pullback. Does the system allow for that?
Currently, no,
No.
but it is a fun research project that is, probably something to think about.
Yeah.
It was, it's in the back of my mind. I haven't spent tremendous amount of time. Shorting the market is very hard,
It is
generally
hard.
speaking, and obviously it's
Mm.
a sign of the times, right? Like we've been
Yeah.
in a very since 2009, basically when I came in. I mean, it's been pretty straight up, right?
Yeah. Yeah.
So, but you're correct. I think there could be a day where it would take the inverse and maybe hedge or pick up some alpha that way.
Yeah.
So could
Yeah.
happen.
Yeah, yeah,
Not
yeah. It's
presently
just
though.
interesting. I mean, I love the idea of yeah, building a portfolio of ETFs, good thematic and yeah, and I guess because it's that diversified, it's going to avoid the things like the trade desk that could open down 33% today. You're not going to get that in an ETF usually. Knock on wood.
Exactly. Yeah, exactly. This one to me is almost like the real kind of staple or the anchor of my portfolio, and it does of my trading system just in as a whole.
Yeah,
It is. Yeah, it's kind of the most it's the most fairly straightforward, and it's kind of my home base where, if the S&P is up, or, if indexes are good in the year, like I would expect that this trading system is going to be pretty good. Whereas Merlin and Lamerick, who knows? They are more uncorrelated, and so things can just change up a little bit there.
yeah. Okay.
Yeah.
All right. Brilliant. Brilliant. Now, I mean, these systems, I know on your website you can subscribe to what essentially get the alerts of what the systems are telling you to do. Is that right?
Yeah, so basically, that same mechanic was when the trading systems or when the market closes for the day, the trading systems will go out, fetch all the data, and they'll look at all of the trades for the next session or order updates, trade management for the next session. And then all of those decisions, all of those things that the system is going to do gets basically posted to the traderisk.com. So folks can just log in, they can follow the system, they can pick different systems, they can pick signals.
Yeah.
There's discretionary traders that look at things and they're like, well, there's no way I'm touching that stock, but
Yeah.
this one looks pretty good. And then I'm like,
Yeah.
hey, if that helps you, then
Yeah.
have,
Yeah.
enjoy type of
Yeah.
thing. Yeah.
Okay. All right. Super.
Yeah.
Well, that's just good for the listeners to know if they, you've done the hard work behind the scenes. You're generating the signals, but there is actually an accessible point for those who want to do what you're doing to actually get the source behind it, without actually having to go in and do the hard work themselves, essentially. Although, I mean, we always stress they must manage their own risk, they must manage their own position sizing, execute their stops, etc., right? If I'm right, you don't trade any client funds at all, right?
That is correct. To this day, maybe my tune will change, but as of right now, no outside client funds, just the trading systems I make public to anyone that seems interested.
Yeah. Okay. So trade your own capital, but you do make this available. Fantastic. And just to reiterate, if listeners do want to go in and see your work and get access to these systems and see how they operate and get the alerts, it's www.thetraderisk.com.
Exactly. Yep.
All right. And anywhere else that we can follow your work?
So the Trade Risk is definitely a good place. I'm pretty active on YouTube as well, posting my thoughts as just a real trader, kind of doing market update videos and stuff. The ironic part is lots of folks, still like those videos or want me to post those videos. But the ironic part is 90% of my capital is still just invested in these rules-based trading systems. So sometimes Evan may say, well, this looks like it's going to do this, but my trading system might say, nope, it's going to, go this way. Ultimately, I follow the trading system. So, but
Okay.
that's right. Traders.com or YouTube.
Yeah. Okay. Well, that's where I found you, on YouTube, and hence the reason why I wanted to get in touch and talk to you, because I thought what you put out on YouTube is really interesting, and I thought we'd have a good conversation. And one of the privileges of this job of mine, of being a podcast host, is that it actually gives me the opportunity to meet people like yourself and have these conversations, which I think is a real privilege. So thank you for taking the time to talk to me. I really do appreciate it. I've learned a lot, and it just adds to a library of excellent guests that we've had on this podcast. And I'm superbly pleased to add your name and add your interview to the library.
Very kind words, and thank you. We've had a lot of familiar faces on the show, so keep up the good work. It is a good public service of education, and so honored to be a part of it.
Fantastic. Thank you, Evan. It's really been a pleasure. Thanks so much.
Take care, Garth. Yep.
Cheers. Thanks for joining us for this week's episode of Talking with Traders, sponsored by IG, a world-leading CFD provider. We really are privileged to have such a strong global provider of online trading services as our backer for this podcast series. Remember to subscribe for more episodes by clicking on the subscribe button of your favorite podcast app, or if you're watching on YouTube, please subscribe to our YouTube channel, give us a thumbs up, and leave a comment. We welcome the engagement. Till next time.